Could this company be the one that will lead your portfolio in returns over the coming years? Could be. Let's talk about it right now. Quick reminder that I'm not giving you advice as to what to do. I'm just telling you what I am doing and why I like this company. Let's go. So what does Steel Dynamics do? They are a recycling and steel manufacturing business. They've got all kinds of products. So let's take a look really quick at their company website. So here's some of Steel Dynamics projects. They've got a bunch of these plants in Indiana, Virginia, West Virginia, Alabama, and they just opened one in Texas as well, or they're in the process of getting one online in Texas as well. Steel Dynamics is manufacturing the steel parts that make up large buildings, commercial structures, railroads, you name it. They basically, if there's large commercial construction to be done, this is the company that's making the products that are needed. Now let's look at the financial side of things. If we pull up the price trend over the last 10 years, you can see that it's just on a steady climb. Nice growth there. Great growth in revenue. You can see if you go back 10 years, $7.37 billion. And last year was basically triple that, $22 billion. Now if we go to free cash flow last year was insane. $3.5 billion compared to going back. We're going to take averages here because we have a lower than average year here, and we have a higher than average year. So let's call this between the two, 222 million, 500 million. Let's call this $350 million. And between 1.2 and 3.5, we're just going to go on the lower side here and say $2 billion. But you can still see that this is way more than like even a 2x in free cash flow. This is a significant increase. So even if you go off of this previous year, if you're taking, 300 to 350, you're looking at like, let's call it 3 to 4 times the revenue growth over the last 10 years. Really positive there. Cash to debt ratio is excellent. So they've got $3 billion in debt, $2.26 billion in cash. It's a $19 billion market cap. So this company holds very little debt that is like hurting them or counting against them. As far as the dividends, we've got a 1.45% dividend pay. And you can see, though, that when you pull up the dividend history, again, really excellent. If you go back 10 years, 11 cents per quarter. Now we're looking at basically 4 times that much, 43 cents per quarter. 4x over 10 years, that's great dividend growth and great returns, and the company is really seeming to position itself stronger and stronger here. I think this trend is going to continue, and so I think this is one where you can buy now at 1.47%, but expect that down the road, the amount you're going to be getting back on that initial investment is going to be much, much higher. Talking maybe 6% of your initial investment by the time you get down the road 10 years. That's pretty good. Now, if we look at return on capital employed, you can see that this company already had some fairly strong numbers. You can see 2018, 25%, 13%, 11%. And then over the last couple of years, that number's gone up even higher. Now, some of that's going to have to do with tariffs that are coming into play against Chinese products. And so they have the market a little more cornered now. But anytime you can see that kind of return on the capital that you lend to them, this company's doing well. They're doing something really positive with your money and giving you, the investor, a large return on your initial investment. That is something very good to see. Now, one of the reasons this company was able to do so well recently is that the price of steel became very expensive there for a while. We're talking 2020s, 2021. And really, when you have just a huge amount of money printing, plus the demand being increased by the tariffs coming onto the Chinese goods, now you have more demand for that. Now, as that demand is there, then obviously companies are going to come in with more manufacturing. They're going to try to meet that demand because it's so profitable to do so, and that's going to naturally drive the price back down. So we can see that happened. However, this company their margins haven't disappeared because of this. Maybe they're going to normalize a little bit, but they just have a very profitable business where they have a lot of margin to play with, so that even if this shrinks up a little bit again, they still have plenty of room to make a nice return on their product. And so right now we're sitting at about $38.26 per ton. At the absolute peak here, $58. So a huge difference. But here's where I think the price of steel could be greatly impacted over the coming years. If we take a look at this article I've pulled up, you can see 2 years ago, President Biden signed the Bipartisan Infrastructure Law And that's going to direct $1.2 trillion of federal funds towards transportation, energy, climate infrastructure projects. Now, when you look at this breakdown of where the money's going, there's going to be a lot of steel used here. Roads, bridges, and major projects, public transportation, clean energy and power, passenger freight and rail, airports and the FAA. So a lot of this money is going to require a lot of steel. So now let's take a look at a couple of articles. It has the most negativity of all the ones that I read recently. And I really was trying to find you a negative article. Didn't really find a lot of negativity out there, which, again, that always makes you kind of just consider for a second, is the market about to trick everybody and everyone's in on this and then they're going to pull the rug? Possibly. Definitely something to consider. But let's take a look at why people are bullish on this company. Steel Dynamics' more than 13 million ton production capacity makes it one of the largest steel producers in the United States. Moreover, as shown by its net income margin of 13.74%, Steel Dynamics has wide profit margins. All right, here's the negativity. Buckle up. The steelmaker released its third quarter results in October, missing its earnings by 1 cent per share. No big deal. However, the market brushed the earnings miss aside as Steel Dynamics stock has risen by nearly 10% ever since an earnings miss. It is clear that it's the outlook that matters here. Steel Dynamics may benefit from a steel price resurgence in 24 if interest rates pivot. In addition, a price pivot could interact with the firm's rapid expansion to deliver significant growth. So Steel Dynamics is expanding across the board. For example, the company's $1.9 billion Texas-based Sinto flat-rolled steel mill started production in the first quarter of 2022. Another example is Steel Dynamics' decision to invest in North American aluminum market via a $2.5 billion flat-roll mill project forecasted to deliver early-stage production in 2025. So not only do they have a quality business, but they're rapidly expanding their business and potentially increasing their output and also adding products here with an aluminum plant. Okay, so now this article is talking a lot about different things you can be doing in 2024, and I like this point number 3. This is the one that stood out to me. Invest in U.S. infrastructure megatrend, which was what we were just talking about. $1.2 trillion is being thrown at this. Reshoring is real. U.S. companies are moving supply chains back home to increase reliability. Federal policy like the Infrastructure Investment and Jobs Act authorizes more than $1 trillion in construction spending. All this creates infrastructure spending megatrend. One company that they believe will benefit is Steel Dynamics. The company also gets an assist from 25% tariffs on Chinese steel imports put in place in 2018. So what we have is a company that is increasing its net revenues, increasing its cash flow, increasing its dividend payouts, and it has low debt and a high amount of cash. That is a good combination with a very high return on the capital employed. We're seeing the business not only just exist and produce the cash flow, but the company is looking to expand and increase even further so that they can continue to raise revenues, raise cash flow, and that is just going to mean more and more returns to the investor over the long haul. Well, that's what I think of this company. But now, what do you think? Tell me in the comments below. Do you like it? Do you not like it? And why? Hope you enjoyed this. I've got another one for you right here. I recently reviewed Hormel if you want to take a look at that stock. Thanks for being here. Have a great week, and I'll talk to you next time.